What I'm going to do is invite all of our panelists to join. Let's start with Shara Senderoff, who is founder and partner of Raised in Space. Welcome, Shara.
Hi.
Great to have you
here. Great to be here, Ned.
And Moritz Beyer-Lentz, partner of Bitcraft Ventures. Moritz, great to have you here.
Hey, Ned. Thanks for having me.
Of course. And Shanti Burgell, managing director of Transcend Fund. Shanti.
Hey, great to be back. Thanks, Ned.
And James Gortzman, who's general partner, and Andreessen Horowitz. James.
Hello, everyone. Glad to be here.
So let me just first off, in the description of the panel, pointed out that investments in the game ecosystem reached about $38.5 billion in 2021. That was an increase of 192% year over year. This panel is going to focus on kind of the broad games ecosystem. And Shara, I understand that you're a little broader than that, maybe more into metaverse and related technologies and content. But what I'd like to do is let's just start by kind of setting the stage here, and it'll be a little bit of a round robin, kind of hear from everybody what your focus area is, what your investment thesis is. If you could mention kind of the stages of investments that you do, and we'll start with Shara.
Perfect. So I'm Shara Senderoff. I run Raised in Space. My focus is primarily Web3 gaming, a lot of blockchain, familiar and obviously deep in general gaming in a lot of ways, have a background and a focus in music. So doing a lot of music licensing around how music interacts with games more in the AAA and broader video game ecosystem, but spending the majority of my time right now really focused on blockchain games, writing checks anywhere between 500,000 and 5 million. Series A is very much my sweet spot. Seed, but Seed is sort of becoming Series A in a lot of ways, which we can talk about later. And yeah, excited to be here.
Terrific. Let's go to Moritz.
Awesome. I'm a partner with Bitcraft Ventures. We've been around for now about 5 years, 100 portfolio companies in the gaming ecosystem. Half of those are studios. Really proud to kind of like back people that previously in leading capacities built games like League of Legends, Valorant, Overwatch, StarCraft, Warcraft. It's awesome to work with these guys and hopefully be a part of bringing their new IP visions to the market. And then on top of IP investments, we also make investments in platforms and tech. We, in 2020, early 2020, just before COVID really hit, we tried to formulate a new thesis for what we've already been investing in for about 2 years at that point in time. And we came up with this idea of synthetic reality. So investing at this intersection of a blender of two worlds, the physical and the digital world. It aged quite nicely through 2020 and 21. And I guess in some way it is very compatible with what people nowadays describe as the metaverse. So on top of game studios, the platforms we invest in usually connect businesses or players or consumers in virtual worlds or interactive environments. And on the tech side, we've made investments that range from anything that bring virtual worlds to life, even from an infrastructure perspective, new forms of content generation, including volumetric video, procedural generation, artificial intelligence, to anything that designs the interaction between users of virtual worlds and the worlds themselves. So AR, VR, haptics, spatial audio, that's us.
A couple of follow-ups, and if I missed this, forgive me, but stages of investment and size of investments.
Yeah, so we started as an early stage fund. That's really our bread and butter. So most of our investments have been seed and A, but we can comfortably invest, I'd say up to Series D at this point in time, and there may also soon be options for us to even extend that life cycle further.
Terrific. Shanti.
Hi, my name is Shanti Burgell. I'm the founding general partner of Transcend Fund. Transcend is an early stage digital entertainment investment organization. We focus primarily on pre-seed to Series A for first checks, then we do follow-on investing in that. We invest globally. I have been many years in Silicon Valley, about 20 years, and I now live in London. So I am boots on the ground for our European operation. And we will be adding additional folks in Asia later this year. So that will give us North America, Europe, and Asia. which is good for a small organization. We're still under 10 people. So we are focused on digital entertainment, fairly broadly stated. So it includes video games. I'm 30 years in the video game industry myself, about half of which was game production. So I used to make video games, and then the other half was corporate development and deal work. So our value add to our portfolio companies kind of spans from the shop floor to the boardroom. We focus on all platforms all around the world, and then shoulder businesses that are, in our view, part of the games industry. So that includes things like animation, streaming, to some degree, some certain platform technologies, and certainly Web3. And so we are actively investing in all those areas, regardless of geography, but very focused on the early stage.
Terrific. James.
Hi, yeah, so I'm actually probably one of the newer investors on this panel. I've been at Andreessen Horowitz now for about 6 months, but I've been in the game industry for more than 20 years. And A16Z may not be necessarily so well known for games investing, although we've actually been doing games investing now for more than 10 years. Early investments included things like Oculus and Zynga. More recent investments are things like Singularity 6 or Mainframe. And I would say we're actually probably moving more heavily into games. We're actually starting to put more and more focus on that area, which is why I came over as the general partner. In fact, I'm about to announce one of my first deals in gaming since I've joined, which is actually a Roblox game publisher. So different examples, sort of the space we look at. But I would say we broadly speaking, think of our investment areas in 3 different spaces. One is content, so games and game studios, creating games across all platforms, both Web 2 and Web 3. We're not limited to just traditional gaming. We are doing a whole bunch of Web 3 investments through our crypto fund, as well as our more broader venture funds. So companies like Sky Davis is one of our investments. Then I would say we're looking at consumer applications in the gaming space, so trying to find the next Discord or the next Twitch. And then finally, we have tools and infrastructure. And that's one of my kind of bread and butter areas. I was a CEO and co-founder of PlayFab before we sold it to Microsoft. And so I've been looking at sort of, tools and infrastructure to support game creators for a while now. So very interested, similar to what Moritz was saying, everything from AI content generation and tools to kind of help make the production process more efficient, to trying to figure out what's going to be the next generation engine beyond Unreal and Unity, and I do think we look beyond just pure gaming. I think the metaverse is an exciting idea that we're going to be seeing game technologies find applications outside of strictly narrow gaming and find their way into other kind of adjacent industries.
Fantastic. There's so much going on around blockchain and games, and I want to hit on that topic. But before we do that, I think it'd be interesting to hear from several of you invest in game studios. And let's start there. And maybe I'll start with Shanti. Like, when you're looking at an investment opportunity in a game studio, what are you looking for? What are differentiators for you? Where do you think the exciting opportunities are with game studios today?
Yes, so there's a couple of different angles to that. And I mean, for us, it starts with the basic orientation of our fund, which we describe ourselves as an audience first fund. And so what we mean by that is we found no truer thing in entertainment than appealing to one's audience. And so we definitely start with that as a launching point for most of our conversations with our founders and potential founders. And so when we were looking at potential content creators to invest in, particularly on kind of say traditional PC console or even mobile, but bleeding on into more cutting edge stuff like VR, Web3, what have you, we definitely look for folks who have a very distinct and authentic view about how they're going to create for their particular audience. It takes a different shape depending on the maturity of that space. So if you're creating for cross-platform PC console, then that's a very different proposition than creating for an emergent area. And so we definitely look for a different skill set and a different maturity level, depending on the maturity of the category itself. So we've invested in leading companies whose names you might know, people like That Game Company, the creator of the hit game Sky, Singularity 6, who James also mentioned. We share that with A16Z. Creators who are targeting more traditional platforms. We tend to look for people who have been there, done that, are very experienced with their craft, and are considered to be, in our opinion, the best in the world in those particular areas. In emergent spaces, we have a different criteria set that we use. It's much more about learning velocity and ability to craft an approach to an emergent space that is credible and yet very nimble.
you touched on just the cross-platform, and is that something that you tend to gravitate towards, game creators that are looking at cross-platform game creation?
It's an exciting area for sure, and we're actively looking at opportunities there. Absolutely. I don't think it's necessarily the only thing that we look at in, say, higher end gaming, but it's definitely one of the more exciting trends is that you can build an audience almost irrespective of platform to some degree, and it's overstating the case a bit. But I think one of the things that's really empowering and wonderful about the current era of video game creation is that you have the ability to address an incredibly large audience. So a large population, whether it's across the world, across generations, across demographics, what have you. And so across platforms, across kind of different forms of tech, and to some degree being able to unify your audience irrespective of what device they want to play on. And I think that's, again, like I'm bleeding into kind of almost a play pattern that doesn't quite exist really, but there are examples of it. So I mean, clearly there are several cross-platform, that involve cross-play, where you can literally have the same population playing one franchise, one IP. And I think that is a particularly exciting form of entertainment. It's usually quite complicated, quite expensive, and it's not to say that we as a fund don't back more targeted bets. We have a very profitable studio in our portfolio called Stress Level Zero. They make games for VR exclusively. And so the words VR and profitable studio don't often exist in the same sentence, but in their case, they are such a focused group and they're able to hit the hardware with such a high attach rate. I think if you talk to people who are VR fans, they probably know this company's game called Boneworks. It's been platinum 2019, 2020, 2021. So it's a very consistent, kind of hit with VR fans. And so that's a very focused form of entertainment versus cross-play, cross-platform, which is, I think, exciting. It's not the only thing we invest in.
James, let me turn to you. And although you're the newest to investing here, you've spent, as you mentioned, 20 years, with game companies and building games. How do you, think about it at Andreessen, in terms of game studios and what you're attracted to, or what you wouldn't look at?
Yeah, well, I think you mentioned earlier that there's a massive amount of capital now flowing into game studios, and that's a relatively recent phenomenon. And it used to be when I first got into gaming 20 years ago, the only source of funding really was game publishers, because traditional VCs. I mean, even when I was pitching for PlayFab back 10 years ago, very few VCs at the time were investing in games, and that's really changed. And I think the reason it's changed is because games are now seen as a investable venture class. And a lot of that has to do with the nature of games as services and the fact that you now have games like Fortnite generating, at its peak, $5 billion a year of revenue. And so I think there's a couple characteristics of the kinds of games that we look to invest in, which are not all games. I think we're looking for games that are primarily social networks. So they're multiplayer, they have a large number of players interacting together. We like cross-platform because of the way it opens up the market. We like games that are, run as a service. So they have an ongoing operations model, often free to play. Live ops is a particular area of focus for myself. And I think that these all together create a really interesting, new opportunities that have really made gaming different. Doesn't mean we wouldn't do other things. And I mentioned this Roblox publisher as an example. That to me is a fascinating. We love new platforms, and so whether a new platform is VR, we think VR crossed the chasm recently with the Quest 2 over Christmas, and so we now are looking at VR investments in a way we weren't a couple of years ago. I think Roblox and Minecraft themselves create sort of interesting new platforms, and of course Web3 is this massive. I'm sure we'll talk about it because you can't not talk about it. To us, that's definitely a new platform as well.
Okay, and Maurice, I want to get you in here too as well, because you mentioned what about half of your investments are in game studios. Is that?
Yeah, we have about 50 game studios globally now. I think Shanti and James made a lot of good points, and I can also only echo. I think for us, the most important two criteria would probably be the quality of the team and the concept. I mean, building great games is really hard. It's an art and a science, and honestly, the ones that have the best shot at it, but by no means a guarantee, are the ones that previously built successful franchises either under the helm of a publisher or even as founders and having exited those game studios. So team caliber can't be understated, especially in early stage investments. But for game studios, it's really the most important criterion. It's not a sufficient one. It's a necessary one. I think on top of that, we really go hard into audience design, like game concepts. We love to see cases where veterans take 80% of their learnings and then apply that extra 20% to make it fit for a gaming audience. It looks quite different in 2022 than it looked, whenever their previous big successes happened. So that's by and large how we approach that. And James also mentioned that this discipline of games VC investing is relatively new. So for us, we're not here to kind of, fund the next indie game or provide some funding to, to launch a game. The goal for most investment cases is really to find the next Riot Games, to find the next Blizzard, to find a team that can build an entire empire around a first game, that can build IP that outlasts maybe a first game and become an evergreen IP. So that's really the bold VC ambition for us, and we don't know yet whether that will work out. Right? To be honest, this is only 4 years old as a VC asset class of sorts, and no funds have been properly returned. Since that strategy has started. So. We're feeling good about it, but the future will tell it whether it works or not.
Sure. I don't want to leave you out, but so you guys, you mentioned you do invest in some games. How does that fit into your portfolio?
Sorry, this was for me? No.
That was for Shara. Yeah.
So yeah, and interestingly enough, so I also have investments just like the rest of the guys. So I have a Roblox game studio as well. I would say that the differentiation for me is at the moment, I'm very much wearing a Web3 hat and then strategically bringing in portfolio companies to align with the vision of a lot of those Web3 ventures. I think Web3 is in a really interesting space in that it's obviously incredibly nascent, but I am heavily focused on infrastructure because we're seeing a lot of IP in the metaverse right now and very, very, very little infrastructure. We don't have the technical capabilities to build a metaverse the way it's being talked about. We need a lot of components of that, from identity to layer 1, layer 2 blockchains to communication to AI to all the components that we saw come up in a more centralized fashion within game studios, but now it's the beginning of the decentralized world. So I have an investment in a Roblox game studio, exactly like James mentioned. There's a lot of excitement around the audience that's there. And the way I'm looking at that particular investment is that a lot of my Web3 play and earn companies, Web3 investments that are building out significant IP within the metaverse landscape and what that will become, there is simply not the audience that exists in these larger game platforms right now. And so as that IP starts to grow in Web3 environments, there's absolutely cross-platform collaboration that will allow audiences from Roblox to start to understand what the decentralized path into more crypto or blockchain-based gaming would look like. So there's a lot of collaboration in my mind, and that's why I have investments in both sides.
Well, so let's open it up to Web3 and metaverse, because it seems like that is just dominating the deal flow today. I assume you guys are seeing this. I mean, certainly with our investing at Gold Ventures, it seems like, I don't know, 50 to 70% of the deal flow we're getting would be kind of categorized broadly in that space. Are you guys seeing the same thing? And feel free, anybody, to jump in on that.
No, we are. Absolutely. And not only are we seeing the deal flow, but I'm sure my other panels will agree, the valuations tend to be, quite a bit higher. We'll typically see, in the world of Web3, a team that with relatively little experience in game creation, in some cases, no experience in game creation, asking for, and in some cases, getting valuations significantly higher than a very seasoned game team might see in a pure games startup. And so there's definitely a premium right now for, Web3 gaming. Doesn't mean that these are all going to be successful companies. Obviously, the future is yet to be written, and there's a lot of interesting risks in the sector. We see some companies flying pretty fast and loose with some of the, regulations that may come back to bite them in the future.
And are the investments that are you entertaining? I mean, this is investments in token rounds, or equity and token. What has been the approach of the panelists here when it comes to where you think the value is being created and where to place your bets?
Yeah, we were relatively early in the beginning of last year to kind of undergo this procedure to become a registered investment advisor and launch a dedicated token fund, which allowed us to not only play blockchain X gaming as a strategy, but also have a lot of leeway and invest directly into tokens, not just equities. So we're certainly keen on that. I think in the current environment, especially pre-public launch, tokens are an asset class that has performed ridiculously well. Using ridiculous as an adverb is probably also something that promotes caution, right? In the end, this is just a form to gain exposure to a certain idea. So will that normalize over time? Maybe similar to how specs have normalized over time when supply and demand, find a new equilibrium. To me, that makes sense. For now, it's a great VC asset class, frankly, if you get the pre-public launch tokens. But also, I think we don't even want to bifurcate so much Web3 gaming, Web2 gaming. Web3 is obviously super interesting. And I was doing play to earn gaming 20 years ago before it was cool, so to speak, in Diablo 2, excessively playing, 8 hours a day for multiple years at some points in 2003 and 2004, better than everyone else who was playing at the time. But there was kind of like play to earn gaming before it was cool, and unfortunately before it was cool. So that's why I still have to work. Otherwise that might be good. But the fascination has always been there around digital identity and digital assets and digital ownership. And I think it's hard to say that won't matter going forward. It will probably only matter more. And that's the excitement for us to back game studios, but also platforms and tech in the space. I will add, though, that most of the deal flow right now is also, there are a lot of startups out there that kind of like jump on the hype and jump on the promise. We will this year see game studios that rival Web2 games with much more substance and depth in game design. Even on the Web3 side, we just love to find trained game devs and people who have previously built great games, because in the end, it doesn't matter if you're building a Web2 game or Web3 game. Your number one job is to entertain, to build something that is retaining users, attracting users, build lasting social experiences. The number one job of every game is to be fun, right? That's the media class. You should entertain, because if you're not, then you have a long time problem. And then Web3 is really just a means of distributing that value that you create through fun. But I think it's a means to an end. Just like a startup wouldn't pitch you on a game that's built on Amazon Web Services. Look, if you want to use blockchain to distribute value and incentivize your community, that's fine. But first, I'd like to know more about the game you're actually building.
I'll chime in just on that point. I think couldn't be more spot on. And the majority of my Web3 companies that do hold expertise in tokens, and I'm investing in both exactly to the elegance that was just described in their caution, but also their value as an asset class and the excitement that's around them right now. But most of my Web3 companies that have extensive experience building blockchain infrastructure are partnering with very established Web2, I don't even want to put that title on it, but very established game devs, because we need sophisticated game devs to build these games. It couldn't be a incredible point that was just made around the need. There just aren't Web3 companies that have game studio experience. They don't have it. So from an investing standpoint, I don't even look at half of these companies when they pitch me that they're going to build a game. My question is, who is actually going to build it for you? Because you're simply not capable. Now, your expertise in a lot of the blockchain components that could be really valuable to the expansiveness of the audience and and the distribution mechanics and a lot of the more interesting, innovative pieces around the utilization of a token are incredibly important. But that is a very valid point in that the evolution of Web3 games, it will have some sort of bridge back to traditional, sophisticated, and established game studios.
Yeah. But I'm also going to make the point that we've seen, it's interesting, there's a lot of talk about the red pill or the blue pill. And I would say my one cautionary tale is don't take the purple pill. I think we see a lot of Web2 companies that are interested in getting into, not to your point, Shar, I think we see a lot of traditional game studios who see all the valuations and the excitement around Web3, and they want to get into it. And so we see these pitches where they've taken, what would be a great game idea, and they've sort of sprinkled on, kind of crypto dust without really understanding the underlying mechanics. In many cases, they're copying what they've seen other companies do without really understanding the basics. And the result is not something that we would invest in, So I think there is this interesting, you've got to be, essentially crypto native and really understand the mechanics and understand the space, because it evolves so quickly. Literally week by week, we see changes in tokenomics and sort of, best practices, and the understanding of how to build long-term sustainable game communities that will monetize and have strong engagement, year after year after year. If you can do both of those things, then you're in a rare class, and I think it will be very valuable. And I think companies that are trying to do just one or the other are going to start to fall by the wayside, especially, as I mentioned earlier, the regulatory risks. I think we're starting to see, one of the things that we're advising companies not to do is, raising money primarily through token sales directly, as opposed to, doing token drops to create, by all means, create value in your token, but, raise money through equity and then use your token drops primarily to incentivize your community, as opposed to trying to directly sell them to your community.
I think a lot of things are changing pretty dramatically in this space. I mean, we're an active investor in Web3 as well. We have several play to earn style companies. We have infrastructure investments in Web3, investor in Polygon, investor in Venly, which is NFT and wallets for crypto. But that said, I think it's hard to miss, the crypto winter that has just occurred and the risk-off environment and macro economy overall. And it's not that won't have an effect on all of this, and certainly it will. And the changes that were ongoing when the market was hot, I think, are going to be met with new changes now that the market is not so hot. And so your original question, Ned, around are we seeing lots of pitches? Yes, we are, and I think some of that is a trailing indicator. So I'll be interested to see what this looks like 3 months from now, 6 months from now, in terms of once people who are not dedicated to the space because of its potential and because of their deep understanding of what you can and cannot do with this toolkit are gone and kind of have washed through because it's no longer the bright shiny thing. Because I think there is some of that going on for sure, but there are kind of interesting things about the platform, and I would definitely agree with James's point that going to it as a native is definitely going to get you farther faster than kind of hedging your bets and trying to kind of bridge something. That said, at GDC this year, one of the hottest topics that I heard kind of discussed again and again was Web 2.5, which sounds on its face like a hedge. Right? It sounds like, oh, well, I'm going to take a little bit of that and a little bit of this. But I think it actually isn't. I think one of the things that I think you see when you try to get seasoned game developers with great tools in their hands to go after something new is that they figure out how to make the best case, how to make the best use of kind of these things. And so what Web 2.5 has meant in most of the conversations that I've been in with entrepreneurs that are truly passionate about it, has been an on-ramp to Web3 that doesn't feel like one. So you don't have to connect a wallet up front. You don't have to know that much about all this crypto talk. You don't have to be a crypto native yourself. The development team does, but you as a consumer don't. And you can basically be normalized to all of this in a much more kind of humane and, dare I say, Nintendo-esque game ramp than, what currently is Gen 1 of a lot of crypto gaming experiences, which are pretty harsh and are a little bit abrupt, sometimes a lot abrupt, and sometimes very difficult to see kind of your cousin, your grandmother, your non-tech friend engaging in sincerely if it wasn't for kind of the financial payoff. And I think that's the last point I would make on this, is that the first generation of this, I don't think was very entertainment first. I think it was primarily financial orientation first. I think it was primarily interested in leveraging tokens for financial gain and playing those games like as if they were gold farming. And that's, as Moritz says, that's a dynamic that we've had in gaming for a long time. So it's not new, but it's also no surprise that a lot of these use cases came from traditional gold farming territories. And so a lot of the best cases of kind of Gen 1 play to earn were from places that understood gold farming quite intimately. And were really great at understanding that use case and going hard at it. Whether we get to new, more entertainment-driven use cases in Web3, I think that's the next challenge. And there are a lot of games in development that should measure up to it, but we'll see, because I think we are entering a bit of a risk-off environment where like if there isn't later stage fundings for some of these ideas, then it will be that much harder for the earlier stage folks to fund them.
I want to go back to something that James said. James, you talked about the kind of the marriage, or the looking for opportunities that are both strong on the game dev side and on the crypto tokenomics side. What I'm observing is, and I know far less about the tokenomics crypto side. I see these presentations, these decks, and they all seem to have kind of the same. We have all of these great partners from the crypto token, and they're the same partners over and over again. You're seeing them repeated in deck after deck after deck. If everybody's kind of working with the same group of partners, what does that mean? I mean, all of these Web3 game projects with the same group of kind of crypto tokenomics partners can't be successful. So how do you assess that?
Yeah, I think there's a couple things that are interesting there. One point to make about these partners is the way that the power has shifted a little bit in the market, right? There's a sense, and for those people following who are not super intimate with the world of crypto, we're talking about these tokens. And the notion of a token is essentially that you're creating a currency that you can distribute that essentially creates an alternative market cap for your company, because the value of a token ultimately establishes its value. And there are some companies who made a lot of money very early on being associated with these tokens and sort of advising and creating buzz around a token. Because the thing what a token is, like the stock market, the value is what the buyer puts on it. And so the market sort of decides ultimately the value of these things. And so when you are launching one of these tokens and you're putting it out in the market, if you want it to have value, you sort of have to get buzz around it. And there's actually, a relatively small number of folks who sort of have outsized influence over sort of what's hot and what's popular within the market. And so there's a sense of sort of these, I call them almost like crypto whisperers, who sort of have, the ear of the community, who sort of get associated with these projects to sort of help, them be established and help advise the founders. But you're right, see the same names sort of over and over again, because they've been successful with one or two, they have some experience, and next thing you know, they're on a lot of other decks all advising. I think ultimately the success is never going to be because of your advisors or because of your partners. It can't be. The success is going to come because you have an original idea, you've executed it superbly well, you have a great team that knows how to launch and operate it, ongoing post-launch. Those are going to have to be the things that differentiate. And I think we're already past the early win stage. A couple companies early on were able to launch, and by dint of being, sort of like the very first set of games on the iPhone, almost anything would sell well in the early days of the iPhone. I remember people buying, 99 cents for a flashlight app, and that was okay because it was the first app out there. But once you get past that early stage, now the bar goes a lot higher, the competition becomes stiffer, and now you have to add real value to your players in order to be viable. And I think we're already now entering that phase. It'll be very interesting over the next sort of 6 to 12 months. We're going to see a whole new wave of games now starting to come out that have been started over the last 12 months. And they're going to face, I think, a lot more competition than people initially saw. And so it'll be interesting to see how people's expectations collide with reality as we see more competition in that space.
I want to kind of return just to like each of the funds here, and like, how you're thinking about kind of return on investment and what the expectations of your LPs are. And has that changed at all with this focus on Web3 and some of these outside valuations and some of these outside early returns that we've seen? Are you seeing a different set of expectations from LPs? And do you have as a fund any different set of expectations?
I mean, I just jump one thing, so A16Z was one of the first large scale venture capitalists to jump on sort of Web3, where we launched a crypto fund now, a lifetime ago, several years ago. It's like a lifetime in this world. And I will say that our Crypto One fund, I think, was one of the, well, I'm not sure if I can talk about exact returns, but it did well. And as a result, I think it may have set an expectation that this is a space that has, strong financial returns. It'll be interesting to see if those expectations, hold up. I certainly know that gaming is an area that we have high expectations for.
It does have an effect for sure. So I mean, you talk to folks who are up on a given day in crypto, and something might be up 50x, 100x, and so like those type of returns in venture, are pretty rare. So I was a personal investor in Coinbase, and that was probably like a bit of an outlier overall in terms of the the type of outcomes that you can see for an equity finance company. Those type of returns in crypto were happening much more regularly, but they're really kind of chaotic and sporadic. They go up and down quite regularly. Currently, very, very down. And so I think if you'd asked that question this time last year, there would have been very bullish kind of like signals around, a lot of those LP conversations around crypto specifically. In fact, like I think a lot of funds being pushed to, kind of incorporate more crypto just because you couldn't not. The returns were so dramatically better than almost anything else. And yet, kind of the long-term dynamics of games have been strong for decades. And so I think, it feels strange for me anyway, to talk about games as an old business with kind of like old parameters and old growth patterns. But compared to crypto, it does feel like that. And crypto is big up and big down, depending on, kind of what's pumping and what's not. And those conversations do come into the room for sure, like with, like investors, because investors are seeking returns, unless your investors are, strategic investors who invest in, kind of the video game business for strategic reasons, then it might be a slightly different conversation. But absolutely, anybody seeking a return is going to bring crypto up.
And toward your question of, investor expectations specifically, I think there are different expectations between the LPs in our quote unquote regular gaming fund, our venture fund, and then the token funds that we've launched. So we decided to just bifurcate these strategies into two separate funds, also so that our LPs can make their own decisions about how much exposure they want to get to this topic of Web3 gaming, but then also to tokens particularly, which have their own dynamics that are super nascent and are still being figured out. We're solidly into the 4 digits IRR on our young token fund 1, and that has probably set certain expectations also for token fund 2. I think timing in the market was exceptional with the first vehicle. We invested, I think, in the first 10 companies we invested in, and those were all seed investments. 4 of them moved into the $1 billion territory, which kind of like drove that return in very outsized dimensions. Will that be possible again for token fund 2? I mean, it's hard to say, right? Like the trick is between the vast amount of opportunities that lands in our inboxes these days, and from the comments here on the panel, seems like that's the case for everyone. There is a lot of great stuff between that, right? I think it's very easy to just point fingers at Web3 and point out all the things that aren't working or where people are jumping on the hype bandwagon. I mean, we wouldn't all be carving out the strategy and investing in this area if we weren't fundamentally convinced that Web3 is here to stay, and that this idea of true digital identity as its ownership beyond just the custodial will of a company or even a nation is not of fundamental importance to not just games, but possibly humanity, right? As much grandeur as that may convey. So, it's hard to get all this stuff right. And even I think popular examples like Axie Infinity and the tokenomics of Axie Infinity, right? I mean, give those folks a break. They built something that hasn't been done before. Right? And I'm not old enough to really speak from experience for that, at least not from an investor perspective, but free to play gaming was very similar. people looked at it and were laughing it off, and the early implementations were poor, and now it's here, and that's kind of like the status quo. So we'll see how this unfolds. There's enough great talent, there's enough great ideas, there's enough great technology, and also starting this year now, great IP being built in Web3. So I think we're all, as much as we like to be smart about the things that don't work, also appreciate the things that are being built in impressive ways.
In our last few minutes here, I want to shift gears a little bit and just kind of talk about things that we do as investors beyond just putting money in, because there's a lot of talk about this, and there are a lot of funds out there right now, and it's competitive to get into the deals that we all want to get into. Andreessen, you guys were revolutionary at one point in kind of changing the model for investing and doing a lot of additional things. And I know from working with all the other three of you on the fund that on the call here that you guys do a lot for the companies that you invest in. Love just to kind of hear you kind of talk about that a little bit. Maybe we'll start with Shara.
Yeah, I think for me, the check is the last added value of what I bring to the table. So much of the investments that I made are based on betting on myself more than or equal to betting on the company. I'll jump in every way, from product to marketing to biz dev to everything. For me, the way I run my fund is very thesis focused. I have a clear vision of areas of passion and areas of just overall vision for the expansion, in particular with Web3. But then the way I look to invest into companies is how open the founders are to really just hit the ground running. So for me in particular with Raised in Space, writing a check is the last thing. I think to your point, Ned, and to everyone's point, there is so much money out there. You have to be really selective as a founder as to what type of investor you want. In some cases, it might just be give me the money and step away. But if you want investors that are going to be more hands-on and are going to help you push the boulder up the mountain, which I think in Web3, to all the points made, you need that. A lot of just to chime in on the point made earlier about seeing a lot of these token advisors and the same ones over and over again, those guys and the usual suspects are in most of my investments with me, Delphi Digital being a great one. Those guys advise on tokenomics across the board. And because they advise so much, they're seeing so many of the innovation tests or new thinking or constantly checking their way of advising, simply because they're in so many of these investments. And so I think that's actually even more added value because of what they're seeing. But I think that if you're a founder who looks to an investor to be hands-on, and you should want that, because again, none of us know what we're doing. We're driving a car that is going into a brand new world. We need as much knowledge and experience as we can get on cap tables, in my opinion. Anybody else want to touch on this point?
Yeah, I can maybe add a few other things. So, I mean, similarly with our portfolio, we definitely work with them actively in different functional areas of their business, depending on what part of the cycle that is. So my partners and I, we all are games operators. We've been in the industry for decades. I myself, I used to make video games. I've been in the business for 30 years. I've seen pretty much every cycle from packaged product through to digital, from free to play, mobile, esports, all of those cycles. And so we unpack that knowledge base, selectively as is valuable for our founders. And then we are also, involved in, specific things that they call on us to either just give advice on or to plug them into our network around, helping to hire, helping to set up an entity, helping to arrange meetings with potential acquirers. A lot of those things really depend on the stage the business is at. So in the early days, it's all about company formation and creating, a hiring strategy, what should our HR plan look like, how much needs to be in the option pool, very kind of like functional nuts and bolts level questions. As we get into, building product, it moves to other topics that are more around product design, potentially tokenomics if it's Web3, economy design if it's free to play, what have you, into growth, into, kind of selection of partners. Publishing is still a part of the games business for a lot of people. We are actively involved in helping them evaluate publishing deals on a regular basis. I myself used to be on the other side of that table, so I'm intimately familiar with how publishing deals work, the trade-offs, like who's best at what. And then at the end of all of that, like actively helping to work with our founders to hit liquidity events, to bring on, kind of new investors. I sit with our founders frequently looking at, kind of follow-on lists of investors for follow-on investment, Series A, B, C, D, and then exit. Having been a corp dev person and essentially run the M&A process for a public company and private company in free-to-play games, I'm intimately familiar with the buyer view of why they purchase companies. And so helping position the companies for exit is actually a process that starts way before, like an exit is even contemplated. And we in certain cases begin that process shortly after our seed check. So it just depends on the type of value that a founder is looking to unpack at what point. And then we look to leverage our long history and our networks and our familiarity with the industry to make that happen.
All right, I think that's the final word. We are out of time. Shara, Maritz, Shanti, James, really appreciate having you guys on the panel, and look forward to collaborating with you in the years to come. Thank you to the audience for your engaging comments. Our next panel at the top of the hour is going to be on DEI and developments in the game industry. So join us at the top of the hour. Have a great day, everybody.